Am I audible?
Yeah, Jaman.
Yeah. Welcome everyone to the monthly market mantra post-election. The first commentary from our fund manager, senior fund manager, Mr. Deepak Ramaraju. I'd just like to introduce Mr. Deepak at Shriram AMC. He heads the equities at Shriram AMC and over 17 years of experience in equity markets and is chemical engineer by academic background. He began his investment career with Sanlam Investment Management, which is South Africa's top three asset managers, where he ran their 20-member offshore equity team and advised them on their India Opportunities Fund. The fund successfully delivered over 3x return with consistent alpha in a span of 4 years and won the Raging Bull Award for the best offshore Far East equity general fund category in 2016. As a part of partnership between Sanlam and Shriram Group, Deepak moved to Shriram Life Insurance as their interim CIO, where he rebuilt the fund performance. Prior to joining Shriram AMC, Deepak helped set up the PMS funds at Shriram Way to Wealth Securities. As a head of equities at Shriram AMC, Deepak has developed and implemented the prop enhanced quantamental investment model across all equity funds with positive impact on quartile rankings. Prior joining the investment world, Deepak was a researcher and co-inventor at GE's India's Technology Center in Bangalore. His innovative approach is reflected in the 10 patents to his credit as a co-inventor at GE. His Six Sigma Green Belt has helped him bring a robust, statistical-led approach to developing the quantamental strategies at Shriram AMC. Over to you, Deepak. Thank you.
Good evening, everyone. So let me just share my screen. I hope my screen is visible to everybody.
Yes.
So I'll be talking about the monthly market update for the month of for the month of May. So more importantly, we have been in a kind of post the event of elections. So there have been major activity happening in the markets right now. So I'll be just talking more about that. What's the view on the kind of interest rate scenarios and the inflation going ahead, and what can be expected from the markets and the sectors going ahead. So before that, let me just highlight about the performance. We have been in Q1 and Q2 in the performance perspective in the last 3 months to 6 months, and then more than a year basis as well. So, and for ELSS tax saver fund as well, we have continued to remain in the kind of the Q1 and Q2 performance consistently. And across all the schemes, we have been in Q1 and Q2. We have been consistently beating the benchmarks on consistently in all the schemes, and as well as the aggressive category average as well. So we have been in there in the top 10 ranking across the periods. Since the time we implemented this strategy from September onwards, we have seen the turnaround in the performance of all the funds. So whether we are talking of the flexi cap or the ELSS tax saver, the aggressive hybrid, or in case of the balance advantage, and as well as in the case of multi-asset allocation. So in the multi-asset allocation, we are only comparing against the equity taxation kind of funds, the funds with equity taxation point of view, where the equity holding will be more than 65%. Now, what went positive for the markets in the last month was prior to the elections, the markets were completely volatile. We are seeing volatility in the markets. There were amount of selling pressure as well. So we saw the VIX going up to almost like 2022 levels prior to the elections. At post-election, the VIX even raised up to 30 levels as well as the election results were out. More importantly, we saw the BSE market capitalization hit the 5 trillion mark during the month, especially it raised almost 61% since March 2023. And more importantly, on the macroeconomic data, we saw the GDP growth coming in at 8.2%. That's stupendous growth for the country that we have been seeing. The robust growth was supported by the manufacturing, agriculture, Agriculture was marginally impacted the GDP growth due to the El Nino factor, but the manufacturing and the service sector continue to lead the GDP growth consistently there. So that's predominantly on the India as a whole. To summarize on the major updates. On the US side, if you look at the inflation fell to 3.4%, which was in line with the kind of expectation. The PC index was also in line with the expectations. So that also kind of gave way for the kind of some kind of hope that the interest rates will get cut sometime later during the year, or in our expectation, we expect the rate cut to happen sometime in the first quarter of next year. So we're not going to see any kind of inflation coming off very soon, immediately right now. So until the demand gets disrupted quite significantly. The supply side constraints continue to persist as of now because of geopolitical factors. So we're not going to see the inflation coming down, but what we are seeing is incrementally the macros are kind of weakening in the US markets. That's going to impact the job markets to a certain extent. So when the job markets take a hit, that's when the demand actually is expected to go down a bit. So that will have a bearing on the inflation going ahead. And the inflation can come down in the medium term to longer term. So we don't expect a short-term trend in the inflation to come off. So it's going to be in the similar range and slowly trend lower as we go, as we see the data coming off. We are not going to see any Fed rate cuts. We're not expecting any Fed rate cuts ahead of in this calendar year because of the election one. Second thing is, though I don't see any kind of election or the political pressure on the US Fed to cut the interest rates until unless the inflation comes down to 2% or below 2.5%, I don't see Fed will be in a hurry to cut the interest rates. So the GDP missed again. The Q1 GDP was reported at 1.3%. It was missed estimates by 2.4%. So this is the first indication of slowdown happening in the kind of economy. So we are seeing the PMI also coming off a bit, and the job markets also taking us showing signs of stress getting built up in US. These are early days, but until unless we see a continuous stress building up in the economy, we're not going to see the demand getting destructed for the inflation to come down. And that will also give an impetus for US Fed to cut the interest rates to bring back the growth. So I don't see that happening immediately. So it's going to be a time-bound phenomenon. It's going to take a bit more time for that to happen. On other global markets, if we have to talk about the German GDP growth forecast was fixed at 0.3% by Deutsche Bank, and from a previous estimate of 0.2%, we are seeing a kind of growth in kind of GDP growth in German economy. So after the forecast of contraction in the GDP, so that's a positive move for the Germany as a whole. But the inflationary pressures are still persisting there. So that's another thing that we need to watch out in the European markets. Japanese manufacturing PMI came at 50.4, which was marginally expansion mode after 49.6 number fixed in the month of April. So kind of improvement seen in the Japanese economy marginally, but again, the interest rates were hiked from the minus 0.1% to 0% level as of now. So the Japan's interest rate stands up by 0.1%. So that's where we are seeing kind of inflation, which actually had spiked in Japanese economy. So we are going to see some kind of moderation happening in the inflation there. And also the currency yen also is going to stabilize against the US dollar. But it's early days. We might see more rate hikes coming in Japan as we go further down. So China, on the other hand, we saw the home prices kind of rise slightly because of the demand improving marginally. We saw kind of also the government also intervening in fixing the home prices marginally there. The property prices, after making the bottoming out in the month of April, we saw some kind of price movement happening on the positive side by 0.5%. Early days, the government intervention is just coming up there. They are cutting interest rates. They're also pumping in the liquidity to boost the Chinese government, the Chinese economy. That would take some more time by the government for the economy to revive. But more importantly, we are seeing kind of inflows, the FI inflows increasing in China. So China as an economy as a whole, if you look at, we are seeing more FI flows going there towards China because the valuations are much cheaper and the economy is on a recovery trajectory there. So, but we may not see a sustainable flow into Chinese market as well, but it can also reverse at any point of time. Global factor crude price dropped to $80 after hitting a high of $90. So now it's back to $80 levels. So the OPEC members have started phasing out voluntary output cuts. Despite that, the demand being lower, so we are seeing kind of the crude price coming down to $80. More importantly, the commodity prices shot up. Metal prices and the gold prices hit all-time high, including the silver was up during the month. gold made a high of 2,450. Similarly, silver also is making a high now. So all the commodity prices are getting up, going up. So, but the crude on the other hand is going down because the demand is being slower.
Deepak, sorry to interrupt. If you can mix slightly Hindi, that would be great. There are two comments, sir. Please use Hindi.
Okay. So talking of elections, तो election 2024 के बारे में अगर बात करेंगे तो the outcome clear है अभी भी. So the outcome is clear. NDA is going to form the government. NDA का government अभी आ जाएगा. तो majority है NDA के पास. 294 का numbers था. अभी independent candidates भी merge हुआ है. So it's now the new majority for the NDA is around 303. The numbers were showing at 303 for NDA with independent candidates also joining the BJP-led government there. More importantly, the current partners TDP and JDU for now have confirmed to remain part of uh, the NDA government. अभी तक तो TDP और JDU ने confirm किया कि they are going to be part of the NDA. और more important and other important thing is this is always a threat. जब भी कुछ ऐसा coalition बनता है because BJP on its own doesn't have the majority. उनके पास 240 seats है जो majority से short है अभी भी. So that's where it can also be kind of a threat to the sustenance of the government in the longer run. Now, what can be expected? BJP might have to compromise on key portfolios. कुछ portfolios में compromise करना पड़ेगा BJP को. And UP में जब अगर आप performance देखोगे, so then the BJP will be drawn to the drawing board. They have to go back to the drawing board, rework on the strategy to get back the seats in UP. UP elections will be critical because the Rajya Sabha membership will be the key thing for the Rajya Sabha members. The number of seats in the Rajya Sabha will be critical because that will be a key thing to pass the bills. आगे बिल पास करना है तो राज्यसभा में उनको सभी सही मेजोरिटी होना चाहिए. यूपी का इलेक्शन इसके लिए बहुत इंपॉर्टेंट और क्रिटिकल है. और बिहार इलेक्शन विल ऑल्सो बी क्रिटिकल बिकॉज अगर जेडीयू अगर एनडीए में रहना है, अगर बिहार इलेक्शंस में जेडीयू अगर ज्यादा सीट्स जीत गया, अगर मेजोरिटी आ गया, दे माइट ऑल्सो थिंक ऑफ स्विचिंग पार्टीज फ्रॉम NDA and move back to even India bloc and negotiate for a better terms. अगर बिहार में जेडीयू को अगर ज्यादा मेजोरिटी नहीं आ गया स्टेट इलेक्शंस में, they'll continue to be part of NDA. They may not move out of NDA. So BR elections will also be a critical factor to watch out. And more importantly, the coalition will approve most of the economic policies. अभी policy का ऊपर कुछ questions आ सकता है, तो हमारे हिसाब से तो इकोनॉमिक पॉलिसीज विल नॉट बी स्टॉप्ड. मोस्ट ऑफ द इकोनॉमिक रिफॉर्म्स या डेवलपमेंट या ग्रोथ रिफॉर्म्स जो बोलते हैं वो इजीली पास ऑन हो जाएगा. आई डोंट थिंक एनी कोलिशन पार्टनर्स विल स्टॉप दैट, बट it will be modified to a certain extent. Most of the coalition partners will try to put their say and then say that ये इतना कीजिए उतना कीजिए, so they'll have their own say in that. But most of the partners have kind of, both TDP and JDU are known for the growth-oriented reforms. So they'll be kind of supporting the growth policies and growth reforms. And even without absent of JDU also, the government will continue to be in majority. They'll continue to stay intact. So I don't see any kind of concerns coming from that. But more important, the economic policies will go through. Where the issue will come is the social reforms, such as CAA or reservation quota. This might take a back seat or might be kind of, they may not go through as originally planned as per BJP. So these are the things that might change because of this coalition effects. And more importantly, the dictatorship issue, which was coming up in the past, that will not come through. More importantly, the other important factor is the opposition will be stronger. So opposition will also get more power to question the government, which is good for the economy in the longer run. अगर आप मार्केट का परफॉर्मेंस देखोगे, सो लॉन्ग टर्म में कोalition गवर्नमेंट्स में मार्केट्स हैव जनरली फेयर्ड बेटर कंपेयर्ड टू अ इंडिविजुअल पार्टी गेनिंग मेजॉरिटी. We hardly have seen individual parties gaining complete majority. So, for example, 2009 to 2013, when the Congress government was in absolute majority, they were not having that kind of, the market did not perform as much great. Whereas if you look at the current phase also, 2019 till 24, only the last 1.5 years or 2 years post-COVID, we are seeing the markets performing really well. Prior to that, even after COVID, because of the liquidity push, markets outperformed. Otherwise, it was only because of the reforms we saw in the last 1 year or 1.5 years ago, the sectors performed. That too, selected PSU stocks performed. If you look at 2019 and prior to that, we were facing some issues with the government as well because of the BJP government also issues आया था market performance के ऊपर. But in general, when you look at a coalition government, for example, 2000 to 2014 to 17, the market performance was really good. You saw the mid caps and small cap outperforming the broader markets. You had a very good performance. When if you go back to the history, also if you look at the coalition government performance, in any coalition governments, the markets have in generally given a very good returns. That's one thing which is positive for the markets as a whole. Which are the sectors to watch out? Abhi जो coalition government आया है, so I think the infrastructure push will
ಡ್ಯಾಡಿ
continue
ಅವತ್ತಿನ
to.
ದಿನ ಹೋದಾಗ ಚೆನ್ನಾಗಿರಲ್ಲ, ಅವಾಗ ಹಿಂದಿನ ದಿನ ಫಂಕ್ಷನ್ಗೆ ಹೋಗ್ಬಿಟ್ಟು ಅಲ್ಲಿ ರಾತ್ರಿ ಇದ್ಬಿಟ್ಟು ನೆಕ್ಸ್ಟ್ ಡೇ ಕರ್ಕೊಂಡ್ ಬರ್ಬೇಕು.
Ajit, please mute everyone, please.
Yeah, the infrastructure push like telecom, roadways, railways, ports and airports, that will continue to kind of get an impetus. The infrastructure push will continue to happen because that is the kind of backbone for attracting the FDI. FDI को attract करना हो या किसी का kind of growth develop करना है, तो the infrastructure is a critical backbone of that. More importantly, energy is the other thing because BJP government was kind of always backing and cutting down the imports and focus on exports. So the major import basket for us was the crude. To cut down on the crude imports, that's where the government push was to focus on power, green hydrogen, renewable energy, lithium or sodium batteries production. So ये सब तो चलेगा ही. So these are the sectors you need to be kind of watch out, and then they'll get the impetus. So the next 100 days or during the budget, you might see some more announcements coming here, especially on the renewable side, rooftop solar. That will get a major push. Green hydrogen के लिए PLI लेके आ सकते हैं. Power demand is continuously going up. So renewable energy or the PSU stocks will continue to be in kind of play here. On the manufacturing side, the defense will still get an impetus. On the infrastructure push, your telecom, roadways, railways, ports or airports, this will continue to outperform. And the growth phenomena, like what the government focuses on the growth, so then the manufacturing has to be a key thing. In that case, your defense, industrial equipments, automotive, your precision items, your electricals and electronics and semiconductors, your communication equipment, this will continue to gain kind of impetus. Affordable housing will be another sector you need to watch out for. And water as an infrastructure will be a major thing. So your canals and then connectivity of your water supply to household, jal se nal se jal, wo sab policies, to it will be taking a major impetus right now because this government will now go back to the drawing board to make sure there'll be more growth oriented, to bring in more kind of employment to the people. They'll try to do more better things so that they can come back to power in the next term. So the BJP will be more aggressive on these aspects now. They'll try to do the course correction now. So the next 5 years, you'll see more course correction happening. The government will be expecting more and more reforms to come out, and they'll be more focusing on the social issues as well, like creating more jobs, kind of supporting the poor, or kind of those kind of policy measures will go through. Some of the social issues like CAA or the reservation quota might take a back seat. So again, those things might be kind of, which is the social issues. They will not try to kind of disturb the coalition dynamics. So jab tak coalition dynamic disturb nahi hoga, they'll try to push as hard as possible. So that's where the things will be of kind of impetus right now going ahead from the governments. Now, talking of the geopolitical impact and the kind of global market performance, coming back to market performance, if you look at India, underperformed the broader markets and MSCI terms in the last 1 month. But if you look at the 12 months performance or the 1 year performance, we are the best performing markets in the last 1 year in the dollar terms. In the last 1 month, we have seen the small caps underperforming, but consistently against even the mid caps and the large caps. Large caps also generally underperform, mid caps outperform. But if you look at the 1 year, again, the small caps continue to outperform. So the preference for mid and small will continue to be there from the retail investors, whereas FIIs and the institutional investors will be more backing the large and mid caps to a large extent. Large caps are fully valued. It's trading at 2 times standard deviation. Mid and small caps continue to be expensive. So we are going to see the more expensive performance from the mid caps have become more expensive than the small caps. This data is up to 31st May, but post elections, we are seeing kind of correction and the course correction happening there. But again, in the last 2 days, we are seeing kind of recoup of what's happened, and now the markets are almost at all-time high. The mid cap and small caps are continuing to go back to the all-time high region. So कौन सा सेक्टर अच्छा कर रहा है? मेटल्स, ऑटो, PSU, ये सब सेक्टर्स कंटिन्यू टू आउटपरफॉर्म, स्पेशली मेटल सेक्टर्स आउटपरफॉर्म्ड. Your auto sector has outperformed by 4.1%, and then the public sector enterprises, the PSU companies, वो consistently outperform कर रहे हैं. Real estate was the other sector which outperformed the last 1 month. Sectors which underperformed was IT. IT continues to underperform, but in the last 2 days, थोड़ा बहुत IT sectors में थोड़ा buying दिख रहा है, but it's early days. We have to see the demand has not changed. The demand scenario has not changed. It's kind of bottoming out. The IT sector अभी bottoming बन रहा है. थोड़ा बहुत ग्लोबल स्पेंडिंग आना चाहिए. जब तक स्पेंडिंग नहीं आना चाहिए आएगा तब तक तो आईटी सेक्टर रिकवरी का सस्टेनेबल नहीं रहेगा. सो इट विल बी अर्ली डेज बिकॉज ऑफ अनसर्टेनिटी. पीपल आर मूविंग मनी फ्रॉम वन सेक्टर लाइक योर पीएसयू स्टॉक से लेके थोड़ा बहुत आईटी और एफएमसीजी स्टॉक्स में थोड़ा बाइंग हुआ है लास्ट 2 दिन में. सो इट्स अ शॉर्ट टर्म फेनोमेना दैट वी आर सीइंग. एफएमसीजी ऑन द अदर हैंड थोड़ा बहुत मानसून अच्छा आने का चांसेस है और काइंड ऑफ रूरल डिमांड इज गोइंग टू रिकवर ऑन एक्सपेक्टेशन ऑफ दैट. थोड़ा बहुत बाइंग हुआ है बट अंटिल अनलेस वी सी अ रिकवरी इन द अर्निंग्स, जब तक अर्निंग्स में रिकवरी नहीं दिखेगा, एक्चुअल रूरल स्पेंडिंग इंप्रूव होएगा, तब तक यू नॉट गोइंग टू सी अ मेजर मूव इन द निफ्टी एफएमसीजी इंडेक्स फॉर दैट. So on the sector specific approaches, consumer durables will be kind of underweight. It will be stock specific. Bottom up stocks will be taking up. When it comes to oil and gas, the sector is expensive. अभी तो expensive sector level पे trade कर रहा है, but will be like stock specific. Bottom up approach ले रहे हैं हम इधर. And auto sector we continue to remain overweight because the consumption demand is going to be strong. The manufacturing impetus will go to be continue to be there, and more new launches will be coming out from auto sector. Despite valuation remaining higher, we expect the auto sector to generally relatively outperform the broader markets. FMCG we are going to remain equal weight as of now. We are slowly adding buying FMCG stocks, but it's early days. जब तक रूरल डिमांड नहीं पिकअप नहीं होगा और इन्फ्लेशन नीचे नहीं आएगा, the input cost has to come down, the margin has to improve. In the recent quarter, we saw the earnings going to improving a bit on the FMCG stocks. But having said that, we are going to be equal weight on sectors on the FMCG side. Banking will be kind of underweight going ahead because the NIMs will be continue to underperform going ahead. So we will be selectively bottom up on selected frontline stocks, frontline banking stocks, and few PSU stocks भी रहेगा अपने पास. So we'll be kind of selectively bottom up approach रहेंगे हम इसमें. We're not buying into broader banks, and then we're not going overweight on the banking on a gungo space. So we're not there at that point as of now. We'll be remaining underweight. Metals will be it's kind of the prices have rallied quite a bit. So we are kind of booked profits a bit and we'll be selectively bottom up as of now. We have started booking profits in the metal stocks also. We have taken some profits out of the table. Public sector stocks, we have already taken profits out of most of the public sector stocks. We'll be selectively bottom up, kind of stock specific approach लेंगे हम. So this when I tell bottom up for us, it is going to be driven from the model and as well as fundamental. हमारा EQS strategy जो है, उससे हम stock select करेंगे. So our EQS strategy will try to help us in identifying the right kind of stocks, which continues to have momentum, lesser volatility, and which continues to have kind of cheaper in valuation. So ये तीनों factor लेके हम stock select करेंगे. The model will help us in picking the right kind of stock despite all this rally, sell off and re-rating of the stocks again, post sell off again, buying back happening in the stock. So थोड़ा बहुत volatility बढ़ गया stocks में. तो उसके हिसाब से हम volatility को check करके हम the model को we are rerunning the models and then making those adjustments to the stocks. So public sector stocks will be careful and we'll be booking. We have already booked profits in the previous month. We'll continue to book profits as and when there is a rally in the stocks. Our conviction is still stronger on power, infrastructure, defense, railways. Some of these sectors will continue to outperform. We are confident on these sectors for the next 100 days. That's where the announcements are going to come from the government side. These are our expectations. Until we see a different expectations or kind of any change in the policy stance or अगर गवर्नमेंट फॉर्मेशन में कुछ दिक्कत आ गई, so then we are going to change our conviction and then we are going to relook at the valuation of the stock and look at from a fundamental perspective at that point of time. IT as a whole we continue to remain underweight because the demand environment अभी तक slow है. So जब तक demand recover नहीं होगा, we'll continue to remain underweight. Pharma we are underweight though the momentum is showing some pharma stocks are in momentum. हम लोग underweight रह रहे हैं certain pharma sector में. We are stock specific approach ले रहे हैं हम इधर. Because certain stocks जहाँ पे US का exposure ज़्यादा है, वहाँ पे we are seeing some issues of US FDA also coming in and kind of questioning the stocks and kind of putting kind of restrictions on them. So it'll be very specific on stock specific approach. Those certain stocks are coming in the model, we'll be sticking to the model. Some of the stocks where the low volatility is there, we also are overlaying a fundamental cap where the exposure to the US is minimum to a large extent and trying to see the risk of US exposure there on the pharma stocks and accordingly add to the portfolio. Chemicals, clearly we are going to remain underweight on the chemical stocks. Now looking at the bond yields, turning yields, we are seeing kind of correction in the equity markets marginally. That's the reason we are seeing kind of एक curve थोड़ा नीचे आ गया. So अभी तक थोड़ा if you look at the bond markets are in a range. The yields have actually are remaining around 6.98 to 7% mark में trade कर रहा है. So it is in a range as of now. So it's almost kind of peaked up now on the yields. So it's kind of the yields might go down over the next 3 to 6 months. Start showing kind of positive move on the bond markets as well. Bond market will start reacting positively in the next 3 to 6 months. So we have already kind of locked in our bond portfolios to a certain extent. And the yields in the US is also showing kind of it's sticky around 4.5%. We can expect it to go down slowly over the next 3 to 6 months time. FI flows have turned negative. FIs have been negative in the last month. The DI continue to remain positive. So overall, अगर आप 12 महीने का देखेंगे, so irrespective of that, in general, DIs have been the strong bias in this market. FIs which were positive and they've just started turn negative as of now. थोड़ा बहुत अभी negativity चल रहा है FI market, FI तरफ से. We are going to see more outflows coming from FIs. So though there was opportunities for FIs to come in when the market had crashed, but we are not seeing FI flows coming in a big way. With the coalition government, so FIs will generally be kind of try to stay away from Indian markets to a large extent until unless they see some kind of certainty from the policies or kind of reforms coming out from the government side. They'll generally try to stay away from the markets as of now. So until unless we see going to see the budget announcements or kind of major policy announcement from the government side, we're not going to expect FIs to come in a big way into the markets here. Talking of global updates, US inflation is going to remain sticky. The inflation generally will be sticky across the globe because of the geopolitical factors. The supply side constraints are still there. The demand side, the macroeconomic theme has to deteriorate much for the demand to get disrupted. The job markets has to get stressed. Until unless that happens, we're not going to see the inflation coming off immediately. So over a period of time, you'll tend to hear more of negative news from the job market side or the GDP side or from the PMI side. Those numbers will start showing kind of stress in the economy. That's when the demand will actually come down and the inflation has to get reduced over a period of time. जब तक वो नहीं होगा तब तक आपको interest rate cut होने का chances ही नहीं है. So interest rates will continue to remain sideways. Macros have started showing signs of slowdown. Abhi we just started seeing signs of slowdown. The new home buyers kind of it's a kind of stress in the home buying the home market also the housing market is also start showing signs of slowdown. The job openings have started reducing. So this is the time when you're going to see more and more stress building up in the economy. Your GDP has started coming off. That's kind of another stress building up in the economy. जब तक ये ज्यादा नहीं होगा तब तक आपका इन्फ्लेशन नीचे नहीं आएगा. पूरा जब ये इकोनॉमी थोड़ा बहुत नीचे आने के बाद ही you can expect the US Fed to start cutting the interest rates. Until unless the economy goes down further down, तब तक US economy will not be, US Fed will not be in a hurry to cut the interest rate. So we can expect the interest rate to remain flat in the medium term, at least next to 3 to 6 months. We're not going to expect any interest rate cut happening in the US market, nor UK interest rate will be cut to that extent. Japan, we saw the interest rate going up from minus 0.1 to 0.1%. So it's almost like 0.2% rate hike has been taken up by Japan. So kind of that's to tame the inflation in the Japanese market and also to stabilize the currency to a certain extent. European Union, again, we are not going to see many rate cuts happening. So, but European Union, actually the European economy is seeing the inflation coming off more faster compared to the US actually. So we are listening to the comments saying that we are going to keep the interest rate higher for longer term. So, but this is also going to impact the government also. US Fed will not be able to keep the interest rates for longer until there's inflation, because what is happening is US ka debt itna badh gaya, almost we have $8.9 trillion of debt. that is going to mature over the next few years. So that means to say the नया जो debt जब mature होगा उसका interest rate का burden ज़्यादा होगा because interest rate already ज़्यादा है. So the US government will have to pump in more interest payments for the debt they have already borrowed, which will be negative for the government as well. So that will impact the balance sheet. So that's the reason you might see there are also commentary listening on the street saying that US government, the country will go through recession because of this factor, because गवर्नमेंट के पास पैसा नहीं रहेगा स्पेंड करने के लिए, तो इसके कारण क्या होगा, रिसेशन पे जाने के चांसेस ज्यादा है. तो इसके कारण दैट पीपल आर टेलिंग दैट the higher interest rate is going to impact them in the longer run. But in my view, they're going to time it in such a way that the interest rate cut will also happen along with this maturity. So they're going to match the maturity profiles to a large extent, make sure the interest rate cut also happens around the first quarter of next calendar year. Immediately post elections, we might kind of get a news from USFDA that their rate cut might happen, but provided the inflation has also started coming down. अभी तो इकोनॉमिक डिटोरेशन देख रहा है अभी, सो इसके कारण द इन्फ्लेशन आल्सो हैज टू कम डाउन अलोंग विद दैट. जब इन्फ्लेशन नीचे आएगा, सो दैट विल गिव काइंड ऑफ इन द नेक्स्ट 3 months यू सी सम काइंड ऑफ पॉजिटिव मूव ऑन इन्फ्लेशन. दैट विल गिव एन इम्पेटस फॉर यूएस फेड टू कट द इंटरेस्ट रेट टू मेक श्योर दिस condition is avoided to a large extent. US Fed will want to avoid this condition of higher borrowing cost. So they want to avoid. Yields have tended higher, so it's kind of trading around 5%. We are going to slowly see that interest rates are going to, the yields are going to go down slowly. So it's going to be a slower phenomenon as when the inflation is going to come down. You can expect the US yields to also to come down going ahead. The domestic updates, the GDP growth has been quite phenomenal for India. We have seen almost 8.2% GDP growth. So that's actually a very good number. What India has been growing, the fastest growing economy in the world as of now. So that is actually also led to the kind of fiscal formation as well. So it's also helped the fiscal consolidation to in a bigger way. And also gross fixed capital formation is also increased quite a bit. So that's also helping the country to boost the fixed capital formation also has gone up. And the deficit is also reducing accordingly. More importantly, the GST collection has been robust. So we saw almost 1,72,000 crores of GST collection. So that's kind of remaining stable and consistent. Though the month of May, we saw some dip from the month of April. But in general, the GST collection has been because of the elections season, because we have seen a major minor dip here, but that's seasonal as well. If you look at last year as well, if you look at the April month was at 1,87,000 crores, and then the May month was at 1,57,000 crores. So, but incrementally, we are seeing a growth in the GST collection. That means to say, this is an indication that the earnings growth will be positive, the revenue growth will be stronger. That means to say, this will also the corporate earnings will remain to be robust. So the valuations where the Indian markets are trading at which. So this is an indication that the valuations are relatively sustainable in the medium term to longer run for that person. The manufacturing PMI is resilient and the service sector PMI is also resilient. This is another measure of indicating how the corporate earnings are going to turn out. So the earnings will be resilient going ahead. So what are the key things? So now, if I have to look at the outlook, so inflation is going to come down slowly, moderate over a period of time. We have to see the normal monsoon coming here. That is one thing which will be a key thing for the rural demand also to come back. That's a very critical aspect. And the liquidity is just adequate. We're not seeing any kind of increase in liquidity. Interest rate abhi niche aane ke chances immediately nahi hai. So at least we're not going to expect any rate cut happening. So we can expect the rate cut, possible one rate cut in this calendar year, or my expectation personally, I would expect kind of one rate cut in the first quarter of next calendar year only. Bond markets are trading at, the yields have been trading at 5% and then, 7% and 4.5%. That's going to continue. So we're not going to see an immediate drop, but slowly we're going to see the yields coming off. Equity markets will tend to remain volatile till the clarity of the portfolios or the ministers have been defined. So until the ministry has been kind of allocated and the policy measure starts coming back, the markets will tend to remain volatility. The volatility will be higher. The VIX has come off a bit since the last 2 days, but it would take some more time for the VIX to come down. But eventually VIX has to come down. It has to cool off from the current levels. So we are going to see the volatility coming off as well. So markets will continue to remain volatile and move sideways in the near term. Markets are waiting and watching for the reforms or kind of who will be the new ministers for different the ministers who will be appointed for different portfolios, and that will give an impetus for the markets for further looking at future growth aspects. And budget will be a very critical term for the markets. So the budget is something which will be keenly looked up by the markets. Key risk, stability of the newly elected government. So that's always going to be a risk going ahead. But as of now, we're not going to see that threat because the coalition governments in general, TDP is also going to be backing up BJP in a longer term. So we're not going to expect TDP to slip jump the gun basically, unless we are going to see some kind of difference of opinion or kind of difference in the policy measures between both the parties. JDU, Bihar elections will be critical, but even if JDU moves out of the coalition as well, the government is going to remain stable. There's no threat of JDU moving out. So even if JDU moves out of the coalition also, there's no major threat for the government. Any discontinuity in the economic development policies, that's a major threat. So which is not really expected as of now. Any populistic measures or reforms policy, that will be crucial to be watched out for, because if any populistic measures are taken up by BJP in a significant way, that might do a course correction for them as a party, but which may not be in line with the kind of the deficit aspects of the country. So that is something that we need to watch out for, how they're going to manage the deficit and also the populistic measures. That's something that we need to closely watch out for. Any short-term spike in inflation because of the geopolitical escalations, that will be critical. So that will be the key risk for the markets as of now. So we'll have to wait and watch who will be the new ministers, what kind of policies the government is going to announce, what kind of budget will be announced in the month of July. That will be the critical factor for the markets as of now. So we can expect markets to remain sideways, relatively volatile, and it will be in a wait and watch mode before to take any kind of move either on the positive side or the negative side. The market will be in a wait and watch. That's predominantly the update from my side. So I would be happy to answer any questions.
Yeah, I have a question, Deepak. I have a comment to make as well. Am I audible?
Yeah.
Okay. So at the outset, I think I must heartily compliment you and the team for having managed such significant alphas in such a market. I mean, if you look at something like the Flexi Fund, I think it's going up to almost 7.5%. And on the lower side also, it's about 2.5 to 3%. So basically, in a competitive scenario like this, getting an alpha itself is commendable, but the range of alpha in your case is very good. So congratulations, well done to Deepak and the team.
Thank you, sir. Thank you.
Yeah, I have a couple of questions here. So, when it comes to distribution, when it comes to client psyche, many times in the past, people have seen good alphas created by various, forums, various funds, etc. I know the pulse, I know the leadership, and I know this is not a flash in the pan. But, to explain it to clients, what are the key inputs that you have for us, especially how is it that the EQI gets trained frequently? Because so far the market has been largely, on the positive side, if you take the last 12 months. But given the situation which you just alluded to, I mean, we are pretty, we are all saying pretty confidently that, the government comes. You've been very clear in articulating how the alliance will happen, etc. So expecting volatility is, I think, given. How does the EQI get trained to help us, achieve that alpha consistently going forward? So if you can throw some light on, how to articulate this, because when it comes to sectors, Deepak, I mean, someone like a Sunit, a Tandon of Quant also will say the same thing. I exited the PSU bucket. I exited this. I'm going into consumption. So, more often than not, we'll find that most of the, other people who invest will also have similar stories in terms of sectoral biases and preferences. And then it probably boils down to, as you rightly said, the bottom-up search and thereafter the EQI throughout. So how would we be very different from the other quant players? And, how is it that we can have larger, clients coming into our, let's say, our investor base, how do we educate them? It's more an education-based question for me. It's not questioning you, Deepak, because your performance already shows.
Sure. I understand. That's fair enough. So, thanks. It's a very good question that you have asked. So it's also I need to explain the broader community as well. So let me just share my screen and just run you through how our backtested model has really worked. Now, this month-on-month performance of the model versus the CNX 500. I hope my screen is visible.
Yes, it is, Deepak.
Now,
Yeah, it's visible.
I have taken the month-on-month performance of the model and the benchmark and calculated the alpha here. Predominantly, if you look at from September onwards, this is the kind of alpha that we have been throwing out even in the fund as well. The actual fund is also mimicking the similar kind of alpha that we have delivered. Now, there are phases how the model relearns. It's a very good question that you have asked because I have identified those phases where yellow is marked as outperformance, your cream is marked as underperformance. There's a broad-based rally. It might be on the positive side or a negative side, broad-based rally happening in the markets. It can be a bull market, a bear market, or a volatile phase. Now, we have identified different phases. More importantly, what we have seen is a sustainable rally happening in the alpha will also result in an underperformance also in a couple of months. It might underperform for 1 or 2 months. That trend is a following trend that we have watched over a period of time. Now that's going to continue over a period of time. Now that is how the model behaves. But if you look at in between, you might get a bear market completely. For example, in case of a COVID kind of situation, the model consistently outperforms. Now, when there's a broad-based rally happening in the market, for example, in the month of April, the index itself was up 15%. The model was up 12.5%. So we had an underperformance there. So when there's a broad-based rally between your mid cap, large cap, and small cap consistently rallying at the same point of time, the model will generally tend to underperform because you're trying to capture certain pockets of the market. You're not trying to capture the whole of the markets, and your allocations may not work in the way the benchmarks or the index rally. Some of the small caps which are having very small allocation, they would have rallied 20-25%. So that will lead to the underperformance at that point of time. But eventually what we are seeing is for every consistent outperformance, you are going to see kind of underperformance also following. And it doesn't mean that it's continuously going to underperform. Or now, why this is happening, the phenomenon, why this changes as a cycle, it rotates. There's a mean reversion happening in the markets. Now, what's happening in the last 1.5 years? We have been seeing kind of shorter cycles of sector rotations happening. 1 month you are seeing kind of railways outperforming, 1 month you're seeing power sector outperforming, or 1 month you'll see the metal stock outperforming. 1 month you'll see suddenly the banking back into action and banking stocks will tend to outperform. Your IT stocks suddenly once in a blue moon they'll wake up and they start kind of outperforming. So what that time happens is when once we try to do the rebalancing of the portfolio every month, we are going to check the factor weightage of momentum, volatility, and value of each stock. So how the factors have been changing. For example, if the valuation of one of the stocks has gone up, its ranking is going to come down. That means to say we have to book profits and go out of the portfolio. It might go out of the portfolio. Another stock will come in. So eventually what we'll be seeing is if the PSO stocks are seeing incrementally increased in valuation, their weightages will come off. But if it's momentum and kind of volatility continues to persist, they might continue to remain on the top, but the valuation factor will be kind of underperforming. But the other factors will try to keep them on the portfolio. But in that case, what we try to do is we try to overlay our fundamental thought process. Yes, it's a risk for the kind of underlying benchmark that we are holding. I might have to take out profits here. We'll have to book profits. So that's what we did in the last couple of months. We have been booking profits in the defense stocks and the railway stocks. We have booked profits. We have brought down our weightages. We were at 1.5% weightages for certain names like your Cochin Shipyard or for that matter, Mazagon Dock or Garden Ridge Shipbuilders. Now we have brought down to almost like 0.6 or 0.7%. If you look at the weightages, we have brought down consistently. So that's how we had to overlay a fundamental thought process. Quant model will throw certain numbers. Your fundamental is what we have to overlay and then try to take out the risk out of the table. So that's where our fundamental thought process will make sure that we are trying to bring down the risk. But eventually the model tries to relearn every time when there's an outperformance, and then over a period of time, some stocks will go out and new stocks will come in. So that's the reason you'll see kind of underperformance and outperformance coming. So it's a cycle. Whenever there's a mean reversion, the model will try to relearn try to throw out some bad stocks and try to bring in good stocks. Bad stocks in the sense it's not from the quality perspective, from the factor perspective. It might be from the momentum or the volatility, or for that matter, the valuation. Sometimes the stock value volatility might increase. When the volatility increases, the value, the scoring of that in the model will come down. So these are the things which the model automatically try to relearn when the market cycles keep changing. And that is also led to the underlying cycle changes of the sector rotation that's happening at the back end in the markets. The model tried to relearn which sectors are coming in and which sectors are going out. What is happening to the relative momentum of those stocks within those sectors compared to the broader markets, how they get ranked. So they automatically get positioned accordingly. It might be overweight or underweight certain months. So we'll have to take a call on those things fundamentally, and we will be watching how the factor scores have been moving from one over a period of time. If they're consistently are increasing, that means to say they are in an upper trend. So we kind of ride those trends on the positive side. When once we see kind of stress building up in that trend accordingly, so that means to say there's consolidation happening in the stock, we'll immediately have to book profits and come out of that time. So the model helps us to time the entry and exit in a more methodological way. So that's what we are kind of, though it might be a flash in the pan, as you said, with the alpha, but sometimes what will happen is this will take a course correction as well. For example, in the day of election, we did not take any action. So we just waited for the model to play out. We allowed the things to settle down. We knew that we did our maths correct on the numbers. We saw that if JDU goes out also, the government will still be stable. We're not going to take any kind of threat there. The next day we saw after TDP statement coming out, the stocks re-rating, but again, some of the defense stocks underperformed. We were holding some of the defense stocks. We underperformed yesterday as well. But today, if you look at the performance of today, all the defense stocks are up. So recoup the alpha. So sometimes just holding it as it is and believing the model will also help out, because the model will tell certain things. In the longer run, the push from the government side is still stable. The conviction also is being mapped to what the model is also telling. I hope I have tried to explain the things to you.
Yeah, this was very useful, Deepak. Good luck and all the best to you and the team for the future performance.
Thanks, Jay. Any other questions?
You can also type your questions in chat box.
There's a question from Mr. Balaji. What will be the potential in semiconductor manufacturing in India? We have seen 2 plants getting committed already for setting up the manufacturing of semiconductors. Mostly it will be, if I have to talk, we're not going to see kind of the fab itself getting manufactured here. It might be more of embedded kind of a thing. The assembly that's going to happen. To manufacture the fab itself, you need that high pure silicon kind of the process. So that's a bit critical from a technical point of view, until unless people have overcome the technology gaps, and if they're tied up with some foreign partners, or if they have their own technology, I'm sure they might be having while they're setting up the plants and process here. But it's got a huge demand, because going ahead, the world is moving towards AI and as well as connective kind of approach. Most of it's going to be controlled by through your apps and kind of connected world. So that's where your semiconductor demand is going to boost much more. All your automotive, electric vehicles, or for that matter, your automotives, or your mobile connectivities, your AI is going to be making inroads in across all the sectors, including healthcare, the human sensors, everything. So sensors in our bodies as well that we are going to be fitting going ahead. So everything needs semiconductors. So without a semiconductor, you can't make those electronic circuits work properly. So that's where the potential is quite huge. But right now, if you look at from a competitive perspective, from a cost perspective, we were getting semiconductors cheaper from Taiwan and kind of other countries outside, for that matter, China also. But this government was focused, especially the BJP government in the previous Avtar was focused on kind of cutting down the imports. They wanted to make it more self-reliant because we have seen in the past the impact of lack of semiconductor supply at point of time. That impacted the auto sector quite a bit in between as well. So, and also other related sectors also got impacted. To avoid those kind of scenarios, that's where the government is bringing in PLI schemes so that people set up their own semiconductor plants in the country. In fact, that's going to be a government-driven phenomena. So government is going to push it up, push this sector much more. So they're going to be impetus on the sector as well going. So it's quite a big. I can't put a number on the market size right now, so I don't have the numbers ready. What would be the impact of AI in the Indian share markets? It's a good question. We have seen the algos taking over the trading patterns as of now. But again, one needs to look at how regulators are going to work with this kind of system, because eventually the algos have been allowed, the high frequency tradings are already working in the Indian markets. But going ahead, even the stock selection, or for that matter, the quant model that we are talking of, we are already seeing the AI making inroads into that. In fact, we ourselves are working on AI kind of approaches to make sure the news that we get are much more kind of try to predict what's going to happen in the market going ahead, what's going to happen to any particular stock or any news. So look at more of a macro theme and try to predict a news based on AI. Use artificial intelligence, what's happening to the macro theme, and then can you correlate and building covariance models across that, and what's going to be its impact on the earnings of any company. So that's somewhere that's going to be the major inroads of AI into the quant models going ahead, which is already happening. So many of the big players in the global markets have already started using AI in a bigger way. So that's going to be eventually the reality in Indian markets as well. Average cash position, we are at around 9% of cash in FlexiCap as of now. We had book profits prior to the elections. So we were waiting during the day of the election, we bought in some stocks. We bought in some stocks on the day of the election when there was a market crash, and we'll be waiting for more clarity in the government formation. So that time we'll be staying completely invested. So on an average, we'll be keeping around 3 to 4% of cash in FlexiCap fund, and on the similar levels in kind of other funds. 3 to 4% is what we'll be generally maintaining in the cash position. But once the volatility increases in the market, when the valuation increases, we'll tend to stay more in the cash. We'll go as high as around 8 to 9% of cash positions.
Deepak, this is Jay again. Can I ask the second question if the queue is okay?
Yeah, tell me.
So given that, we are on the anvil to grow our AUM in a significant manner, does this provide us with an opportunity to also have a small portion as SMEs as part of our portfolio, especially in the flexi cap? Because this becomes difficult when the fund becomes big, but when you're small, does it offer a chance to have a small portion under SME?
Not really, Jay, because one, SEBI will not allow us to get into the SME space. We can't launch specific SME products or anything. Even to add SME stocks into the portfolio, liquidity will be a major concern that we'll have to report the liquidity to the regulator. So that's something that we'll not do, keeping the risk in mind. So
Understand. Okay, thank you.
it's a regulatory concern what we'll have to face.
Okay. Thanks, Deepak.
There's a question from Ankit Singhal. Is it the right time to invest now because BJP not having majority, so any political uncertainty can impact on the markets? In my view, even if assuming the uncertainty is going to persist for long term, the markets, it is the right time to invest in my view, because even if JDU moves out or even if TDP moves out, I don't think it's going to impact in any big way. Neither, even if TDP and JDU moves, if you work the maths around, if TDP and JDU also moves into India bloc, and also all the independent parties also move to India bloc, that is going to become even more uncertain at that point of time. So I'm sure BJP is not going to leave that to happen. One. Second thing is, even if that happens, that kind of situation happens, that government will not be stable enough. And that will lead to midterm elections coming back into play. Yes, that will add to uncertainty into the government, but any midterm elections, the course correction is going to happen. I think BJP might take much more lead from here on. So even the India bloc will not expect kind of midterm elections to come, because if that happens, BJP will get a kind of softer push now. So they might get absolute majority also. That will be kind of critical thing to watch out. It might be going other way against BJP also, that happened. But the kind of the positioning what BJP has done as of now, I think it will be fair for them to continue. So I don't expect that to happen. But yes, the position will continue. If you look at the coalition 2014 till 19, we were in a coalition government at that point of time. The more stringent reforms happened at that point of time, like your demonetization, GST push, all happened at that phase of time. So despite that, the markets did not make a major correction except for the demonetization phase, or for that matter, GST phase, we had some amount of dip in the markets. But having said that, we are not going to see any major correction coming in the markets until unless there's uncertainty on the geopolitical factors. Though we expect the valuations of Indian markets to remain stretched, that's going to remain higher, and it's going to consistently tend to go up, because the government which is going to come is going to push for reforms and push for growth. No government is going to be in a kind of haste to kind of bring down the growth or kind of reforms. Even Congress government in the previous past, they were pushing for reforms and growth. So it's not that they did not do their best, but somehow some of the parameters, they were not working out well, especially when it comes to managing the fiscal deficits and all those things. So that's history now. So in my view, I think it's good time to invest. Only thing is, we'll have to wait and watch for the certainty who is going to take the what kind of portfolios, which sectors might get changed, the impetus on the sectors that might change here and there. But barring that, the growth story is intact for India. Nobody knows whichever government is going to come, don't want to misuse on the kind of growth kind of premium that we already have against the global scenario. So I think India is going to continue growing. And more importantly, the economic reforms are not going to take a backseat now. The economic reforms will be more stronger, and they're going to make sure the economic reforms will be more kind of robust now. So BJP is going to do more course correction happening going ahead.
Thanks, Deepak. I think there are no more questions. Thanks for your insightful market commentary and future outlook. The performance of the schemes have been impressive. I'm confident that we'll receive your continued guidance. Thanks so much, Deepak.
Thanks.
We'd like to conclude this session over here.
Yeah. Thank you. Thank you, everybody.
Thank you,
Thanks
Deepak.
Thank you,
everybody. Thank you, Deepak.
Thank you.